Pioneer Hybrid won a court battle this week. That story, the rest of the farm news, a market focus on soybeans, and your weekend farm weather forecast for this Friday, November the 6th.
Good morning. This is the Morning Agriculture Report with Wayne Jenkins and Brian Baxter.
Good Friday morning to you. Welcome to the Morning Ag Report for this 6th day of November. I'm Brian Baxter. My co-anchor Wayne Jenkins has today off. A little bit later this morning, we'll have weather outlooks through the 12th day of November. But first up, let's lead off with a brief glance at some of the items making our farm news headlines today. The Senate Ag Committee has approved a farm credit system bailout bill. Pioneer Hybrid won a 6-year-old court battle this week and called for changes in the U.S. seed industry. And USDA analysts say 1988 could bring red ink for poultry producers based on projected record production. We'll have our full farm news report a little bit later, but right now it's time for today's farm market update. Grain futures closed mostly higher at Chicago yesterday as short covering action took center stage in the corn and soybean futures trade. Corn futures were up by as much as 3 or 4 cents during the day, and soybeans were up by as much as 13 cents. However, futures sold off prior to the close, mostly on profit liquidation following the early gains. Soybean futures had the most action yesterday based on rumors that the Soviet Union will make a large purchase of U.S. soy meal. Rumors of export demand helped both the soybeans and the corn, and at the close yesterday, December corn futures were at $1.80, up 2 3/4 cents. March corn moved up 3 cents to end at $1.84 1/2. And May corn gained 2 1/2 cents yesterday to end at $1.89. In the soybean trade, November beans were up 9 1/2 cents at $5.38 1/2. January soybeans closed at $5.46. That was up 8 3/4 cents. March soybeans ended at $5.52 1/4. That was a 9 1/2 cent gain on the day. December soy meal closed up $6 yesterday at $183.60. And December soy oil ended at 17.52 cents. That was a gain of 24 points on the day. In the wheat trade, futures were higher yesterday on continued strength spilling over from Wednesday's trade. However, there was less buying enthusiasm for wheat yesterday than there was for corn and soybeans. Traders were reluctant to push wheat values higher prior to the auction of USDA-held wheat, which is due following the close of trade today. At the close yesterday, December wheat was at $2.85 1/2. That was up 1 1/2 penny. March wheat closed at $2.98 1/2. That was also up 1.5 pennies. December Kansas City wheat closed at $2.84. That was up 2 1/2 cents. And December Minneapolis wheat ended at $2.71 3/4. That was up 1 1/4 cents on the day. At New York, cotton futures closed higher as well yesterday as reports of increased demand helped values, along with reports of a favorable trend seen in the stock market. At the close of the cotton trade, December cotton futures were at 67.50 cents. That was up 15 points. And March cotton closed yesterday at 68.75 cents. That was a gain of 6 points. Livestock futures closed mostly higher as short covering continued to support a stronger futures trend despite weaker cash cattle prices. Traders noted fairly active boxed beef movement, and that added support to a modest short covering rally. At the close yesterday, December live cattle were at 62.62. That was up 40 cents. February cattle closed up 27 cents at 60.62. November feeder cattle ended up 55 cents yesterday at 72.80. Cash cattle prices were steady to $1 lower, with Illinois direct down $1 at $63. And interior Iowa cattle down $1.50 yesterday at $61.50. The estimated cattle slaughter was 131,000. Live hogs also experienced a short covering rally yesterday, with pork belly futures closing quite strong on strong technical support, and that pushed hog complex values to close near their highs for the day. Cash hog prices were also stronger yesterday after having been battered over the past several days. At the end of the day, December live hogs were at $42.70. That was up 53 cents. February hogs gained 90 cents to close yesterday at $42.15. February bellies ended up 65 cents at $54.65. Cash hog prices were steady to $1.50 higher, with Omaha up $1.50 at $42 even. And interior Iowa hogs up 50 cents yesterday at $41. The estimated hog slaughter was still rather high at 328,000. And on Wall Street, the Dow Jones average of 30 industrials closed higher as the U.S. dollar collapsed, and major banks lowered their prime interest rate to 8.75% yesterday. The Dow closed up 40.12 points to settle at 1985.41. Volume was heavy at over 225 million shares. Gainers were at 1272, far ahead of the losers, which came in at 432. And the NYSE index ended at 141.81. That was up 2.70 points.
Today's Morning Agriculture Report, market update, and analysis was prepared by Richard Brock and Associates.
Still ahead this morning, we'll have a market focus with Richard Brock's views on the soybean market. And coming up next, our full report of today's farm and agribusiness news. Now for our full report of today's farm and agribusiness news. On Capitol Hill this week, the Senate Agriculture Committee unanimously approved a bill to provide bailout money for the farm credit system and to create a secondary market for farm mortgages. The Senate bill provides for the bailout funds by authorizing the sale of $4 billion in federally guaranteed bonds over the next 4 years. The bill also guarantees the value of borrower-owned stock in the farm credit system and provides for loan restructuring and an extension of borrowers' rights. The secondary market for farm mortgages, or Farmer Mac as it's called, is opposed by the Reagan administration. But Farm Credit Administration Chief Frank Naylor predicts it will be a part of the final legislation, since Farmer Mac provisions are in both the Senate and the House versions of the bill. Naylor said he believes the unanimous vote in the Senate Ag Committee means full Senate action will come fairly quickly. He said he believes a House-Senate Conference Committee will have a final farm credit bailout bill by Christmas. And on the subject of the farm credit system, Omaha District Vice President Don Korkow says sales of farmland in the Omaha District have been going well because he says farmers have once again become active bidders. Korkow says farmers have purchased 3 of every 4 farms put up for sale by the Omaha District so far this year. In Des Moines, Iowa this week, a federal district court judge ruled in favor of Pioneer Hybrid International in that company's 6-year-old lawsuit against the Holden Foundation Seed Company and its Corn States Hybrid Service. The court found that Holden misappropriated Pioneer breeding material and marketed it as its own. Pioneer Chairman and President Thomas Urban called a news conference to discuss the case.
We chose to call a news conference to announce the court's decision on our suit against Holden Foundation Seed Company and Corn States Hybrid Service because it's just one piece of a larger problem. Pioneer didn't sue to put Holden Seeds or anybody else out of business. That was not the purpose of the lawsuit. Our primary objective was to call a halt to a practice that puts farmers at risk and might ultimately have a profound effect on all consumers.
Urban said a big problem in the seed industry is some companies sell hybrids as though they were different genetically when in fact they are the same.
Now, the primary reason a farmer buys several different hybrids or varieties is so if one proves to be susceptible to a particular disease or other environmental problem, at least the entire crop won't be lost. To suggest that your hybrid offers that assurance when you know, at least implicitly, that that farmer may buy 3 or 4 other hybrids which are identical or virtually identical to yours in the belief that he is spreading his risk is, to me, unconscionable. It's also not very smart, because farmers are beginning to figure it out, and they're going to resent being put at risk by suppliers they believed were partners in their farming enterprises.
Urban called for action to halt this practice. He said it not only hurts farmers and companies like Pioneer who are developing their own proprietary hybrids, but he said it also hurts agriculture as a whole.
It takes us 8 to 10 years to develop a new corn hybrid. If another company can misappropriate proprietary breeding material and sell a similar product 1 or 2 years after the release of the original, then research stops. Now, who loses in that kind of scenario? Well, the research company will probably be the first to go. But the real loser is the farmer, and ultimately the consumer, because without the research investment, new and better products stop coming.
The court found Holden guilty of illegally acquiring and using Pioneer products. However, damages are yet to be awarded, and Holden is appealing the court's decision. In other news, livestock and poultry prices have been very profitable the past couple of years, but 1988 doesn't look as bright. USDA analyst Larry Christensen says record pork and poultry production are expected next year. And Christensen said pork producers will see prices right at or just above the break-even line. He predicted, however, that poultry producers are likely to see some red ink next year. For beef, Christensen said prices look as though they'll average about the same as this year, or perhaps go a bit higher based on smaller beef supplies. Dairy producers are looking ahead to January 1st of 1988. That's the date the USDA must announce whether the support price for milk will be cut by another 50 cents per hundredweight. USDA dairy analyst Jim Miller says that under the 1985 Farm Act, if the 1988 milk surplus is projected to be over 5 billion pounds, then the Ag Secretary must cut milk support prices by 50 cents per hundredweight. However, dairy state congressmen have voiced opposition to any milk price support cuts because they say the whole herd buyout program has the milk surplus under control. In international farm news briefs this morning, Hungary was made eligible this week to purchase 100,000 metric tons of U.S. barley under the USDA's Special Export Bonus Program. A U.S. subsidy will allow Hungary to buy the barley at competitive world market prices. And Thailand is expected to export less rice next year because of drought-related crop shortfalls this year. 1988 Thai rice exports are expected to reach about 2 million tons, and if that happens, that would be the lowest in a decade. Coming up next, we'll have our Market Focus report with Richard Brock's views on the soybean market. Stay with us. Time now for this week's exclusive Morning Ag Market Focus. This morning, the subject is soybean marketing strategies. Morning Ag's Wayne Jenkins talked last month with farm market analyst Richard Brock.
We're chatting with Richard Brock of Brock & Associates this morning. We're going to be talking about soybean marketing strategy. And Richard, if I remember correctly, one time you said farmers always like to have some soybeans in the bin. It's just like a little insurance policy. What?
Soybeans must have some kind of sex appeal or something, because there are a lot of people that just, they still remember 1973, 74 when they hit $12, and heaven forbid we don't have any beans this time around when they hit $12. So, and plus it keeps the bin from blowing down, Wayne, if we've got a bin full.
Well, what factors are affecting the soybean market right now? Things we need to look for as we get into, say, last of this year and first of 1988.
Well, that time period is always one for watching South America, of course. Their crop is in production at that time. We have to watch what is going on there. I think we have to watch what's going on in hog expansion, livestock expansion. Meal usage is strong. Meal exports are extremely strong right now because South America has basically cut off meal exports. So that's helping support the market right now. But going into election year, I think probably the most dominant factor to watch is what's going to be happen to the Farm Bill, and what's going to happen to next year's planted acreage right here in the United States.
That's a little more immediate than the GATT talks that we're involved in. That's kind of a long-range thing, and I'm talking about common market subsidies in the things they sell. But well, if that's down the line, then we really don't have to think too much about that. We better concentrate on something within the next few months, then, shouldn't we?
Well, I think what we should be concentrating on here in the immediate future, from a marketing point of view. Now, let's take a look at the loan program. Let's take a look at what this administration is going to do with Graham-Rudman, because I think we're going to come with some Graham-Rudman cuts, and maybe will already be announced by the time this the show even airs. that may lower the loan rate lower than the 477. So, right now we're functioning under a 477 loan rate. And we're looking at price of beans right now in the central Midwest above loan rate. And so, why people want to store beans and put them under loan when they can get more for them right now is somewhat beyond my imagination.
Okay, well, let's get a little further into marketing strategies, and let's talk about hedging. Let's talk about the futures. What kind of maneuvers should we be doing now?
Okay. Give you an example. One, for people who don't want to use the futures, don't want to use options, etc. If you can get, say, $5.10 for your beans today, which a lot of viewers watching this can. Let's say you got a 477 loan rate. If you can get $5.10 for your soybeans in the month of October, in order to carry those beans into May, let's just assume a 6-cent per bushel a month cost to carry. It's at 7 months from now. So you have an extra 42 cents to break even. So if you sell your beans today, Wayne, at $5.10, and I have a farm right next to you and store mine until May, I have to have $5.52 just to match your $5.10 price. Now, I get the highest coffee shop price. I can brag at $5.52, but you and I both made the same amount of money. Consequently, as I look at that $5.10 price, I say, what's going to push beans to over $5.50 by early next summer? And I don't think much. So, I want to sell the beans because they've got to go quite a bit higher in order for me to pay to speculate on them in the bin.
So the immediate strategy for this fall's bean harvest would just be to go ahead and ride with the cash prices.
Sell the cash price as long as it's above loan rate. If you really think they're going to go higher, buy an out-of-the-money call option where you can't afford to lose very much. That way, if there is a major bull market, you're on it. At the same time, you've got the cash in the bank.
Coming up next, we'll have your weekend farm weather forecast, so don't go away. Hello, I'm Richard Brock. The October stock market crash will long be remembered. Many farmers are concerned about what this means to the price of grain and livestock and the direction of interest rates in the months ahead. I believe the stock market crash should be viewed as an opportunity for farmers. There are more farm profit opportunities now than there were in the 1970s. I'd like to help you turn those opportunities into profits by sending you the Brock Report absolutely free for the next 3 weeks.
Call 1-800-558-3431.
Time now for today's farm weather forecast. More fall-like weather is now covering the nation, replacing the Indian summer conditions we had the first few days of this month. You can see this morning's low temperatures are quite low, with the frosty 20s dipping as far south as Tennessee in the east and into northern Arizona in the west. The 30s show up this morning as far south as the northern parts of Mississippi, Alabama, and Arizona, so it's really quite a cool morning. And it will be a cool day, especially in the east, where upstate New York and parts of New England could have some snow flurries today. High pressure over southern Indiana dominates the eastern half, bringing mostly clear, cool, and sunny conditions. In the west, a low pressure system over Nevada has a trough trailing southward and touching off some showers and thunder showers. And look at these high temperatures expected today. The mercury won't get out of the 30s in northern Minnesota, Wisconsin, Michigan, and northern New England. The west is a bit warmer, with the 60s the most prominent west of the Rockies, the 80s showing up only in South Texas and in South Florida. On Saturday, the low pressure system over Nevada is expected to have migrated east into eastern Colorado. Showers and thunder showers expected Saturday from Nebraska and Colorado southward over Oklahoma and into central Texas. Elsewhere, high pressure is the rule on Saturday, bringing more clear, crisp, and cool fall conditions. On Sunday, the storm pattern in the south moves a little further east, covering the lower Mississippi Valley from St. Louis to the Gulf. In the north, Minnesota may see some scattered showers or possibly some snow flurry activity Sunday, while the rest of the nation should again be clear, cool, and rather dry. Now let's check the outlooks from Sunday through next Thursday. You can see, looking ahead for temperatures and precipitation from the 8th through the 12th, Washington, northern Idaho, Montana, the northern half of the plains, and the western lakes appear to be in for a warm-up as above normal temperatures are called for, and the north central states could experience much above normal readings. Coolest places through the 12th are expected to be in parts of the southwest and along the entire length of the Atlantic seaboard. And for that same period, above normal precipitation expected from Wyoming, Colorado, and New Mexico eastward through the plains to the southern half of the Mississippi Valley. The northeast quadrant of the nation is expected to receive below normal precipitation, while the north central states and the southwest will be dry. Near normal precipitation in the northwest and southeast is not generally enough this time of year to make a serious dent in soil moisture shortages. And those are the weather outlooks through next Thursday, the 12th day of this month. Right now, let's check around the nation for some local forecasts and conditions. And that's your farm weather forecast for today. And a couple farm news notes for today. USDA officials report that U.S. exports of popcorn to Japan have more than doubled since last year. And in Kansas City, Missouri today, the American Royal Livestock, Horse Show, and Rodeo gets underway. It runs through November the 22nd. Last year, the show drew a total crowd of about 300,000. That's all for this Friday edition of the Morning Ag Report. Thanks for being with us. I'm Brian Baxter.